So if you're an active day trader, it's no secret that wash sales, they're not that good. They suck, right? So the IRS put this wash sale rule together because essentially what happens is investors do something what's called tax loss harvesting. And what happens is they look to see if they have locked in significant gains for the year, and they'll look in their portfolio to see if there's any losers there that they still want to be a part of long term. But what they do is they sell it to bring down their taxable gain, which essentially brings down their taxes. And after year end, after 12/31, they'll turn around and buy that same position again because they planned on being long that position, for the long haul. So when you're an active day trader, you may buy and sell the same stock within the same window multiple times a day. So like I know in my own personal trading that sometimes when a stock or a momentum stock is hot, I will trade that same stock for a couple weeks or a couple days depending on how long that volume is there. So the good news is the IRS has established some guidance under tax topic 429, which establishes what an active day trader is for tax purposes. So we have some blog content on our website that covers this topic. So you can check that out at TraderTaxCPA.com. If you're not considered an active day trader, then this video is not for you. You want to make sure that your trading activity rises to the level of an active day trader so that way you can actually take advantage of the mark-to-market election. So the mark-to-market election is awesome because it does a couple things. One thing it does is it gets rid of wash sales, number one, right? So nobody likes wash sales, especially when it comes to tax reporting. It becomes an absolute nightmare. Number two is it converts capital gains and capital losses to ordinary income and ordinary losses. Now, why that's important is because if you have a trading year where you have a capital loss, let's just say for illustration purposes, that loss is $10,000. If you're not a mark-to-market trader, you can deduct $3,000 against other sources of income, whether that's a business, whether it's a W-2, whether you're an independent contractor, it doesn't matter what that income is. The IRS says you can deduct $3,000 of capital losses against other income. You would then carry forward $7,000 to a future year where either A, you had significant capital income. So if in the next year you made $7,000, that would be considered zero because your $7,000 gain would offset your $7,000 loss. Now, if there's no capital income present in the future year, then you can continue to deduct $3,000 each year to offset that capital loss. Now, in the same scenario, if you were a mark-to-market trader and you lost $10,000, you could actually deduct $10,000 against other sources of income in full. So one of the main advantages of Section 475 mark-to-market is losses are fully tax deductible. Now, when you're thinking about electing mark-to-market, there's a couple of things to consider. One, it is a time-based election, meaning if you're an existing taxpayer, like my own personal Social Security number, if I wanted to elect it in my name, I would have to attach an election statement with my tax return basically notifying the IRS that I plan to become a Section 475 mark-to-market trader for the next tax year. So you are electing this statement, or you're making this election for a future year. So you actually can't go back in time and say, hey, I meant to be a mark-to-market trader for the prior year. This is an election that is on a go-forward basis. It's not rear-looking, right? So step one is you make that election statement. So we're in 2020, so let's just say I'm in April and I want to be a mark-to-market trader. I make that election, attach it with my tax return, and then I send it off to the IRS. Come back next year, I'm ready to complete this process. Now, when I'm ready to complete this process, I will then attach what's called a Form 3115. And that application is change in accounting method. And what happens is you're documenting your change in accounting method and you're also completing the mark-to-market process. So there is a Section 481 adjustment that may need to be booked if you held some positions over different periods, right? So you just want to make sure that you get this election process correctly, because I see a lot of guys who either do it on their own or they go to existing CPAs who may or may not understand the exact process. Now, the other thing to keep in mind is if you plan on electing this and you have existing capital losses, your newly 475 election gains, so your mark-to-market gains, won't actually offset your existing capital loss. So if I was in the hole, let's just say my capital loss hole was $10,000, and then in 2020 I decided I wanted to be a mark-to-market trader. If I made 10 grand, that $10,000 won't actually soak up my existing capital loss. I can only continue to deduct $3,000 until it's fully used. So keep in mind when you're thinking about mark-to-market election that if you have existing losses, you may lose the benefit of that. So it makes sense to actually get out of that hole or soak up those losses, because that is a tax benefit to you in future profitable years. The other thing to keep in mind is if you are a long-term investor, or you, let's just say you like to hold positions longer than 12 months. If you're a mark-to-market trader and you elected that in your specific name, your social security number, those positions that are actually long-term will get mark-to-market. And so you'll lose that favorable long-term capital gains that is associated with things that you hold longer than 12 months. So that's another thing to keep in mind. So a lot of times when traders consult with us, what we'll do is we'll hash out these details, because each trader is different. Some guys aren't long-term investors while some are. So it may make sense for you to set up an entity to elect mark-to-market on the entity and then keep your long-term positions under your name. So I know this topic is extremely complicated. So I always recommend traders to reach out to our firm if you have questions, or you can use our website. We have a ton of trader tax blog content out there that can assist you when looking at making these elections. So my name is Brian, and I'm with Trader Tax CPA. I hope you guys learned something today. If you enjoyed this content, feel free to give us a like and a subscribe, and we'll continue to put out trading content for the trading community. Have a good one.